Like we mentioned before, today's title is Gain a Competitive Edge, Uncover Market Insights from Expert Trend Trader Todd Gordon. Again, this is the second part to a two-part series. Let's get the boring stuff out the way. Please take a moment to take a look at the disclaimer. All right, Todd, thanks for joining us today.
Hey Omar, how you doing? Happy Thursday.
Yeah, week's almost over.
I wish it would stop. There's a lot more to do. Week's going too fast. But yeah, so thanks for having me again. Session 2. Welcome everybody. Thanks for taking time out of your busy schedule. Any more housekeeping notes at the top here, Omar? Anything from your end, or do we
I
are you
don't believe so. Yeah.
setting me free?
All yours, my friend.
Okay. All right. Hey, thanks. And got to get the Celsius. In light of today's sell-off, sort of a 1-2 punch from Meta. Numbers were good. The guidance was not great, and they're spending a ton on AI, which is good for NVIDIA. So Meta hit it, and then GDP came out this morning, and there was some not so good information in there, which was slow growth and persistently higher inflationary pressure. So that puts the Fed in a tough position. So markets selling off deep in a corrective territory. And, it's the theme that we talked about last week to get into the markets is it's such a interest rate macro driven market. First and foremost, it's rates and Fed policy and central banks, ECB, Bank of Canada, all around the world, what they're going to do with the rates. Interest rates, impact the FX markets, the dollar, and all the major 8 currencies around the world, which have an impact on commodities, which then has an impact on the stock market. So it's tough to just say I'm a stock market trader right here without being able to acknowledge what's going on the other asset classes that are having a very big impact on the stock market. So you have the best technical setup, but if you don't know, what's the narrative driving the markets and what asset classes besides equity are having a big impact, you could be running into a buzzsaw, and we might be running into a buzzsaw here. So that, and then, the fifth asset class, might be crypto now. Is there a fifth asset class? So there's a lot going on here. And in our pre-meeting, in our pre-show meeting, we decided that I wanted to run a poll and ask you guys. You're spending time right in the middle of your busy Thursday with us, which I very much appreciate. And we want to know, how can we provide the most value to you in the short time that we have together? I went right at you last week. Maybe it's like drinking from a fire hose, but I'd like to be considerate of your time, provide as much value as I can in the short time that we have together. So what do you want to learn about? And we came up with a quick 3-question poll, and I really appreciate it. Everybody gets their keyboards out and their mouses. Get your mouse out and tell me what you would like to focus on. This is kind of like a choose your own adventure, because I can go in any direction that you want. So I think I have the ability to make a poll. Homer set it up for me. Polls, quizzes, Todd's poll, launching. And I would really appreciate it if everybody would give me their feedback here. Question number 1, are you currently using MotiveWave? Pretty simple. And then I'd like to know what markets you're trading. And then I'd like to find out what you'd like to learn about. So I'm just going to take 30, 45 seconds or so, and then watch the results of this poll and then adjust accordingly.
And Todd, if I can add as well, for
Please.
all the viewers, if there's something that you guys want us to cover that isn't mentioned within the poll, you guys can also type that into the Q&A section, and everybody has the ability to upvote it as well.
Yep. And that's specifically for question 3. Once you guys get through that, we're not seeing those come in yet. So let's give them a sec there. Okay. Now, can they see the results of the polls, Omar?
I don't believe so. It's only for us.
Okay. And if I want to show people, if I screen share with it, I wonder if they can see it. Probably not.
You're gonna have to test it out.
Okay, that's fine. I'm seeing 91% answered on question 2. Question 3, we're at 34%. I want to get to at least 61.8% before we move on to that. We're at 38.2. There's your first Fibonacci retracement. We got to get to it. You know what? Let's get to the 786 because that's the key pullback level here. So are you currently MotiveWave user? 45% yes. Or no, 38%. And then 17% maybe in the future. Cool. What markets are you trading? All right. And I'll share my screen here. Let me see if you guys can see it. If not, I'll just read the responses to you. I'm not sure if you guys are able to see it or not. And you guys also, Omar was kind enough to make the Q&A visible to each other. So you guys can, you guys can converse back and forth and see what people are answering. And as Omar said, upvote anything or give us feedback. So what markets are you currently trading? Stocks on the position to long-term, 74%, nice. Short-term swing, 85%, nice. 46% stock options, 45% futures, 35% crypto with 94% answers in. Nice. So 83 to 75% stocks in the short swing position or long-term. Really nice. Half stock options, slightly less than half futures and crypto. Okay. Good feedback there. Now down to number 3. This is what is really helpful. Okay, so rank the topics you're most interested in from 1 to 5. So looks like 33 plus 8. So we're talking 41% is 1 to 2 most interested. And then a good amount of you, number 5, 23% not interested. Okay. Elliott of the current markets. Got it. How to use MotiveWave software and apply Elliott. Sort of wide ranging there. Okay. Learning about the rules and guidelines of Elliott. 28% of you sort of ambiguous to it. 26% at 1 is most interested. Okay. Fibonacci, same thing. And then you guys are sort of in the middle here. Omar, how do you interpret this? We have a variety of attendees here.
Got you.
Yep.
You know, I think I'm in the same boat as the attendees where I can't see the results.
How to use MotiveWave software. So we're at 33. So 1/3. Okay. So about half of you guys how to use MotiveWave software. Okay. Perfect. And then same thing, 33 and 8. So 41. Elliott Wave analysis of the current markets, learning about the rules and guidelines of Elliott, 26 and 13. Okay. Sort of you guys are in the middle of that. Fib actually is the least, 23%, with number 5 not interested. And then they just want 3 in the middle. Okay. All right. Sounds good on that. I appreciate that. I'm going to end the poll. Yeah, but only 45% of you answered question number 3. That's the problem. Come on, guys. 44% of you answered question number 3. I'm going to give you about 30 more seconds, and then we are going to roll. I need more than that. We're working hard here for you.
Yeah.
Okay.
Think of it this way. You guys took the time out of your days to spend about an hour, maybe even an hour and a half with us. Might as well get the most out of it, right? Go ahead and answer the polls, and we'll be able to deliver the most value that we can.
Yep. Absolutely. 44. All right. All right. Well, that's fine. 44%. On question number 3, I was really looking forward to seeing that. Oh, well, we have to be disappointed. Okay. I'm going to end that poll. Oh, look at that. You can share the results. I don't know how you share the results. That's pretty cool. All right. Let's roll. Jeff, what's up? Okay, cool. Jeff says, I know how to use software to appreciate your interpretation. Got it. Hey, Alan, what's up? Didn't see question 3. Okay, can't see the questionnaire. Yeah, Snow, PayPal, Square. Ooh, those are scary stocks in here. Okay. Here we go. We're going to stop sharing. And we should be sharing number 1. Actually, monitor 4, and we're going. All right. So welcome again. I have everything sort of packed into this 1920 by 1080 monitor, which is the best for presentations. I've got probably 9 feet of monitors. You can see the tip over where I normally stretch out MotiveWave to go through my process top to bottom. Okay. And I think, the big thing that MotiveWave does for me is to be an effective trader in this market and an investor, you have to have a process. And the process that you analyze the market needs to be applicable to how you're trading and investing in the markets. I wear two hats. I run a wealth management business, which is active management of portfolios for pre-retirees and retirees. We take an active management approach, which is very important to have a good financial plan to know what your tolerance for risk is. So I'm running longer term money and observing the market in the very short term, because you want to get inside the price action, watch reaction to the data that comes in. So for me, I don't care if you have 1 monitor, 2 monitors. As I said last week, it's so easy to buy a decent sized monitor and plug an HDMI in, and you can have 2 monitors for whatever. It's good with the tools that we're putting in front of you with MotiveWave. I think it's good to stretch out and get a little bit of real estate, because I think with the beauty of Elliott Wave analysis, once you get your mind around it, it's a way to view market trends and corrections at various time frames. And then based on what you're here to do in the markets, select the right sweet spot of a trend or correction under study to go deploy your risk capital. So what that means is, I'm watching monthly, weekly charts, long-term counts of the indexes, stocks, macro markets. Then in the middle, I like to look at like a daily chart, and then I get down to a 1/2 day, which is a 195-minute chart. I don't know if you guys know that, but there's 6.5 stock market hours in a day, right? And there's 60 minutes per hour. So 390 minutes during the stock market day, right? So if you wanted to look at a daily chart, it'd be a 390-minute chart. Divide that in 2, and that's 195 minutes. So for me, I really like looking at the 195-minute, because that's a perfect 1/2 day chart in today's stock market. And again, if there's 390 minutes and you want to divide it into 4 mostly equal sessions, look at quarter day charts. It's going to be a 97.5-minute chart, and I just round it to get to 97 minutes. So the point is, I look at monthly, I look at weekly, I look at daily, and then when I'm deploying my, capital and deciding where to look on the technicals for the wealth management longer term, I'm in this sweet spot here. But then as I'm trading shorter term on the research business, moving in and out of options, I'm down in these guys. But again, the beauty is in the Elliott Wave world, it helps you visualize and have awareness of time frames at multiple degrees of trend that I don't know of any other methodology allows you to do. And MotiveWave, the way I have it set up, and again, if we were all in the same room, I could very easily show you how everything is set up, which we can do. But if we go to the weekly chart of the S&P 500, I have since adjusted my primary wave count on the S&P, and it's pretty significant because I don't often do it, probably 2-3 times a year. And we have adjusted our primary count in the S&P. And to speak to those of you who have no idea what I'm talking about with Elliott Wave, all right, I do think we are in a longer term uptrend. All right. And I think we are still very much in a bull market. The degrees of trend will help you, again, analyze market movements on various time frames. When you're down in here, you're on the 1 minute, 5 minute, 10 minute, 30, 60, 90, 195, 240, daily, weekly, and then we start over here, weekly, monthly, quarterly, super long term, like that. Okay, so I don't know why Tony does it like this. It should be just in one big row, but primary then goes up the cycle and so on and so forth. So I think coming from the end of April of 23, exactly 1 year ago, we've been rallying in minor 5. And when I move my cursor, you'll see that that's green 1. Okay. The long-term implications for that inside of green 1 is this is the likely path that I think. And this is how I'm aligning my portfolio. I'm aligning my, this sets the tone for basically my entire investing life right here. I always look at, of course, the macro, we look at the fundamentals, we look at the rotation, we look at so much, but I do think we are in a long-term uptrend in the S&P. Now, if we go even further than the move up over the last year, and we look at the COVID lows, okay, if you have, I think, wave 1 completed in wave 2, I think we are in the midst of a secular bull market. Okay, we are in a setback here as the market's going through the realization we're not cutting rates because inflation is persistent, and the rally is being challenged right now. So we have intermediate degree wave 3 ongoing. That's the blue parentheses guy. Within that, you're going to have 5 smaller minor waves, and those are the green guys. Within each wave, trend wave, 1, 3, and 5 at the intermediate degree, you're going to have 5 smaller waves at the minor degree. So the 5 smaller waves at the minor degree are this. Elliott Wave is a model. It is a market model, and it has been tried and tested and used for over a century. This is the path that I am looking for the market to basically follow. Let me just go like this. Visibility gets you less than a month. Less than a month. Okay. Now, what I did is I just kicked those labels, visibility less than a month. I don't want to see him up at this high. I don't even want to see this guy on a month. I want to get down to the weekly and daily. I want to see it. So the big question on the table is, can we hold the breakout from 2022? I think it's ongoing wave 1. Later in the year, maybe we sell off down into the election end of year. Then 25 should be a very sharp rally. This is the market model or the context that I'm looking at. Now, if you get off the monthly chart, you realize like this zone that you're looking at, the possibilities are, there's several possibilities of what's going to happen before I could say we're done with minor 1. Now, here's where your trading account and your investing account matters. It all matters. But, the percent distance that we're looking at within this range of where wave 1 and 2 could go is about 13, 14, 15%. That's not insignificant, right? So we know we have to really focus inside of minor 1 on the monthly down over to the weekly. Keep in mind, we just spent how long talking about this minor wave 1 rally up on the monthly. I'm now down in the weekly chart. Minor 1, remember, we're going down the label table. Minor 1 must be comprised of 5 smaller minute waves. And it's not minute, it's minute. So my view now is with the sell-off, there is an ongoing, let me get rid of this just for clarity. We're going to go less than visibility, less than a week, and that. You know what? I'll even get this out of the way. You get the point. So the question on the table is, how far down is this drop on the S&P going to go? We have a significant and obvious technical resistance level from the late 22 highs coming in at 48.23, 48.20. On top of that, if the analysis, my interpretation is correct, the typical fib measurements of the prior known distance of wave 3 and wave 2 will serve as the foundation of a support zone for this ongoing wave 4. Now, do I know exactly where this is going to stop? Absolutely not. Is there a couple different paths that it could take? Absolutely. If I had tomorrow's newspaper today, we could all just make billions and we could all just go hang out in St. Bart's and drink on the beach or do something more productive with our time. Is Elliott Wave imperfect? Yeah, but so is everything else. There's no answer to it. Okay, so this is the primary analysis that I'm looking at. Again, am I rigid in this? No, but I'm listening to what the market's telling me. Now, let's go into the guidelines of Elliott. The market model for an Elliott Wave motive impulsive pattern is this. Traditionally, what happens is the market at the beginning of a 5-wave move is very bearish. Sentiment is horrible. The fundamentals are horrible. People are convinced we're going to new lows. And we go. Shorts start to cover as data is horribly bearish. And the short covering and some very daring new early longs come in. Okay, fine. Get a little bit of buying. Now what happens is the complacent bears step back in and short and sell last remaining positions, and prices sort of float down in wave 2. So the story is starting here. I think this is the beginning of 1. And if you remember early 23, all the bears who got run over back here in 22, they were really grouchy up here. They're like, oh, this is going to sell off. And then we get the deep wave 2. The bears who got it wrong here are sitting back, kicking their feet up and saying, yep, here we go, new lows. The complacent bears then fail to realize that data is improving. You get momentum divergences on the short term, and the market starts to move above. And then all of a sudden, when you take out the wave 1 high, which is right here, everyone says, uh-oh, what's going on? Okay, so that's when the data improves. That's when breakout buyers come, economics improve, fundamentals, sentiment. There's a lot of improvement. Then all of a sudden, people are like, what just happened? We just, I thought we were going into depression down here. We just had a wave 3 rally. Now what happens is the market digests the quick turnaround in sentiment and psychology that occurred right here from very bearish to, whoa, what just happened? Okay, so typically the model in a wave 4 is one of sideways, chop, and a lot of indecision, processing what just happened back here. So typically wave 2s are very directional, and they're not a lot of chop because the bears are so convinced we're going to new lows, and there is selling in there. But then all of a sudden the wave 3s get a lot of short covering, which is why you have such strong moves up. And that's why this was such a great opportunity. Knock on wood, we made a lot of money on the way up here. Yes, I'm giving some of it back now, We just got stopped out of Meta. We had a long-term position. I'll show you that. But the point that I'm telling you, and the reason I'm taking time on this is we may be going into a wave 4 discovery process where we are going to chop back and forth. And is it perfect? No. But what it does is it helps manage my emotions. It helps manage our portfolio. It helps minimize risk and not try to buy breakouts too early or try to sell breakdowns too early. Typically, wave 4 is a lot of chop and slop. So what that means is we have a foundation of comparison, a basis of comparison to compare to wave 2. We know the depth in wave 2. We know the duration in wave 2. If the model is going to serve, and it doesn't always work, but it's a wonderful, wonderful market model, which I showed you last week was given to us by Charles Dow, who's the grandfather of technical analysis in the Dow theory, in that there are 3 primary trend waves. One, here's the middle trend wave, and then distribution is up here. I'm wondering if we are about to go into a sideways chop slop period here. Oops. In this wave 4. Now, keep in mind, the wave 2 that I just talked so much about from late 23, I'm wondering, are we going to go into a wave 4 that is of similar duration and depth to wave 2? And the way you figure out where the boundaries may be, I'll build them for you. I'll rebuild it for you. MotiveWave has it built in beautifully. I don't need this anymore. You don't need this anymore. You got to keep, once you get comfortable with MotiveWave, you're like a kid with crayons. You're coloring and drawing lines constantly. It's like I treat MotiveWave like my journal. Like I'm always making notes and leaving highlights, and I save it. And then, we have a feature set up with MotiveWave where when I hit save, a lot of our clients and customers have MotiveWave, and the Elliott Wave analysis is uploaded into the cloud and it appears on your charts. So everybody who's on S&P Red is getting my updates right now in real time. So again, the foundation for a wave 4, first thing you want to do is a retracement of wave 3. How far is wave 4 going to retrace? So you activate this degree. You right-click on the line, ratio analysis 4v3. That's your Fibonacci retracement. 23% is color-coded blue because that means it's a little shallow, and 38% is green because that's ideal. Orange is going to be, it's a little too deep, which I need to show that. That's a little extended for a typical wave 4 correction. So 50% is extended. Right? So we shouldn't get to 50%. Now, here's the line in the sand. In a good Elliott Wave trend, 4 should not go into the territory of wave 2, which is why I have WCI, wave count and validation, 4607. This is where all bets are off right now. We still have probably 15, actually only 8% to go. Wow, holy cow, only 8% to go until invalidation. Now, speaking to you, because I think 75% of you have long-term stocks, are focused on long-term stocks. Here's where the conversation begins. We have 7 to 8% risk from here for completion and invalidation of wave 4. And the upside, if this is in fact a higher degree of wave 1, we may have to deal with a setback in 2, but I believe if you remember on the weekly, on the higher time frame, what's ahead of us could be a wave 3 rally. So as a trader who is operating with high levels of EQ, not IQ, we're not trying to outsmart the market. We're trying to identify value areas where we have asymmetric risk to reward opportunities. So currently we have about 8% until the downside. And I was a little bit, I got to be honest, I was a little bit grumpy and like, oh man, we have, serious downside to go. But I thought it was like 12, 13%, but it's only 8 now in terms of wave count validation. So you have to think, what's your time frame, what you're holding, what are you doing with this analysis? And if 8% is not interesting to you, this is not the time frame. So we're going to take this minute 4 and we're going to move down because minute 4 will be comprised of corrective labels at the minuet degree. Now, this label table was given to us by Ralph Nelson Elliott back in the 1930s. He was an accountant by trade. He was sent down to Latin America by the president to get their fiscal house in order and get their public finances in order. So he applied his accounting background to the Elliott Wave principle, and it's beautiful. It's amazing what he's done. He's one of the best, most unsung geniuses out there in the financial world. Now, there's been a lot of people who've picked up the Elliott Wave analysis and run with it and gone many different directions other than what was set out by Ralph Nelson Elliott. But that's a conversation another time that we talked about last week. So minuet right here is going to be the degree we're focusing on. How might this correction unfold? So we need a little bit more granularity. The daily chart is not quite doing it for us. So I'm going to go from the day down to the half day. Now, as you get shorter in time frame, the ability to recognize the patterns get a little bit more challenging, which is fine. The way I'm seeing this right now is if we're doing some kind of A wave down, B wave, and C wave, we're going to have a bounce in B. And that B wave bounce should formulate or begin once we have a completed 5-wave move. Now, this up here is really choppy. This is very hard to count from the Elliott Wave point of view, but I'll tell you what, for anybody, just look at the price action, hide the Elliott Wave labels. Like, look, wait, it's a mess. Gap down, up, go down, gap up, close the gap, come back up. Like, that's just crazy chop. And finally, we got the gap down here on April 11th, boom, came back and then sold off. So typically when a move starts out and it's very choppy like this, usually it's some kind of what they call leading diagonal in wave 1. So the wave 1 diagonal I have labeled is like that. So that's 1, diagonal 1 up in 2, your breakdown in 3. I'm wondering if this is 4, and then we move down in 5. So from the half-day chart, let's go to a quarter-day chart, which is the 97. Actually, and we'll even go to a 1/8 chart, 39-minute. We know that from the higher time frame, we're looking at 5 down in A from the March 21st high. So we have a market model to follow. I'm thinking that if we don't close this gap down right here, if we don't close the gap down, we're probably headed down in 5 of A. Typical fib projections are labeled in green. This is the line in the sand. Okay, if we start to break below 786, which in the morning meeting this morning, I said to our members, 49.82 is the key. And it looks like the low has been, and the only thing, I love MotiveWave, but I'm going to ask them, we need more visible numbers than these little guys down here. The low has been 49.90 spot 5.8. So we came 8 points away from the must hold level. All right. So this is telling. So we started on a weekly, went to a daily, went to a half day, went to a quarter day. Now we're on a 1/8 day. I mean, now I'm down to the 15-minute. Elliott Wave allows you, once you practice in your mind, to move between these time frames, because we know we're in likely a bigger wave 4 down that is 8% on the downside possible from the weekly down to the daily. We may have a 3-wave move, A, B, C down on the way, down to that's daily, down to the half day. Do we need 5 waves inside of A, which will then give us a false break in B? Don't get caught in this. I hardly ever buy the first pullback for a long-term move because usually there's a down, get the pullback buyers in, false break their hearts in B, go down, stop them out below the A wave low, get capitulation, and then we're looking for a long-term play. But again, if you think about it, we're doing a lot of work as a short-term trader, but the risk, as I said, down to wave count validation was only 8% or so. So maybe we're getting to a time frame for a longer term trader. Like, I don't really care if we go down, up, down, and then we go. Right. So you've got to find the right time frame for you and what you're trying to do in the markets. It's a beautiful principle that so few have the patience or the imagination to really spend time with and realize it's one of the best trading methodologies out there, because I have a plan of where we may go. And if the market follows the model, that gives me conviction to stay with my trades and to press it. And if it validates my outlook, okay, I'm wrong. We need to manage risk, step aside, and reassess the game plan. It's a wonderful tool for a trader. It's a wonderful tool. So I'm watching, and I mean, I'm going to get down all the way to a 15-minute chart here. So, I'm thinking that we have a 5-wave move. So here's 4, and we're looking down to get down in green 5, which is really small, sub-minuet. So let's go down the label table. Sub-minuet, we're looking for 5 smaller microwaves. Microwaves. How about that? So what do we have here? Well, we have 1 and 2, 3, and we have a correction coming back. I don't think, I don't want to get too advanced on this, but I'll tell you what, if we go down and we complete the 5 waves and make a new low into the 786 of 49.82, and the market starts to reverse, that is a concept called truncation in the Elliott Wave world, which that might be it. And truncation is when 5 does not exceed the extreme of wave 3. So we're going to look at the 4v2, 4v3 comparison. So percent distance traveled in wave 2 was, what is it? 0.66%. 0.66% is going to be right at the 100% right here at 50.23. That's a 4v2 comparison. And then a typical Fibonacci retracement, 38% is at 50.24. So if we start to sneak back below this 50.23, wondering if we have 5 of A, and might that complete the 5-wave move down that began on March 20th. And then we have the B wave bounce. You literally are building a trading game plan that, if it works, you stick with it and you maximize your profit. So probably a lot more than what you wanted to do on the S&P, but I'm planning my trading plan right now here with you live. And I'm just thinking through my head, like, okay, so that's the outlook. Now, in order for this to happen, the B wave to bounce like this, we are going to need some cooperation from the macro markets. And I'm going to look at questions here in 1 sec. I left you last week with the 10-year yield. This is the key driver of this market. It's the U.S. yields and yields internationally outside of the U.S. are driving the rotation in the stock market. And what happens here in fixed income, what happens here in commodities, are going to determine the wave counts and the technicals that we apply to the indexes. Right now, the stock index futures are the tail, and the dogs are yields, short-term, long-term yields, yield spread, FX, because the dollar is moving quite a bit against the yen, And there's a lot of, and I can show you guys what people have wrong about the FX markets, because generally if the dollar goes up, stocks come under pressure. The dollar's going up because yields are going up. And then commodities have an impact as a result of fixed income and FX, and also geopolitical pressures as well. Commodities are pretty quiet today. So crude's at 82.50, it's quiet. Gold is facing pretty good resistance above us. Now, I know I'm going off on a lot of different directions, but that's just the kind of market we're in right now. Gold is at a key level. Here's daily of gold. Why is gold going higher? We can have a long discussion on that, but what I'm seeing is a possible pullback here in gold in wave 4. Now, do you guys know that stocks and gold are positively correlated? Did you know that? Gold is not a hedge against lower stock prices. Stocks and gold for the last, since January, March of 22, so you're talking 2 years and 2 months, 26 months, are showing that they're trading in essentially the same direction. That's a key macro relationship. The intermarket analysis between all those asset classes that I mentioned help you determine and reduce some of the subjectivity of Elliott. Elliott is our trading plan. It's not our forecasting plan. It's our trading plan. It's our situational analysis. It's knowing that we have a few different possibilities as to where we may trade and deploy capital. But we want to know what markets are impacting the stock market, and the rates are very much impacting the move within the stock markets between the preference for value stocks or growth stocks, and we'll get into that. But the point here to finish this is the same reasons that are pushing gold up are the same reasons that are pushing the stock market up. Lower rates, the dollar under control is pushing gold higher, and lower rates and the dollar under control are pushing the stock market higher. So therefore, stocks and gold are correlated. So few people know that. Okay. What do you guys think on that? I'm checking questions now. Robert Prechter asks, like the idea of sharing the draw with MotiveWave, still doing it? Yes. Yep. Marcelo, how to properly identify wave counts on a daily chart, and then what to look for in order to identify an entry in a smaller time frame. Okay. I will share. Here's my live account. How am I doing? I'm only down 10 grand today. That's not bad. It was worse. I have, these are longer term positions I'm holding, but I'm managing them. I took half profits in NVIDIA right here. I bought a Land Rover Defender with them. I did finance some of it because I got 6% rate, so it was good. Taking some heat in Meta. In fact, let me, I can show you the setup there. Like Shake Shack, DraftKings looking good, Uber looking good, Garmin, ONON, Celsius. So this is just one of the accounts that I trade. But how do you make trade setups? Okay. Oops, I want to bring that back. Yeah, AMR. So good question there. Stocks and gold are correlated, but one might lead and lag based on macro. There's not a clear, it's a good question. There's not a clear leader or laggard between stocks and gold right now. It's not like gold is always following stocks or vice versa. Got off the weekly, let's get on to the daily, and let's just take a look and sort of build out that conversation a little bit more. So gold is on the left. This is a daily, and we are seeing a little bit of a divergence, but look, AMR, stocks started to fall. What did gold start to do? And I'm sympathetic with gold bugs. Like, we have inflation. The stock market's been falling for a month now since here. And what did gold do? We went from 2240, we traded up to 2435, but gold sold off. Why do you think gold sold off? The same reasons that the stock market sold off. So in this case, AMR, stocks were leading gold. In this case right here, gold bottomed first, then stocks bottomed. In this case, stocks topped first and then gold topped. However, you know that we are looking at a possible wave 4 support zone here in the gold market. What message is that going to give the stock market? I don't know yet, and I can't wait to see what that message is. If gold can hold this support zone of 2335 to 2290 and start to break above, and stocks start to bottom as interest rates potentially top out, we would say that, okay, I'm interested in a setup in gold. Gold is acting as a leading indicator to the stock market. I like this ABC sell-off in the gold market. A, B, C. Remember, never buy the first pullback. There's usually a false break in B. C wave, you want to go and stop out the lows from A. Right here. Big old gap through, crushed the stops through 23. And now we're coming back above. If we start to get a little strength here, I wish there was a cleaner top to this consolidation pattern in gold. It's almost like an ascending trend line here. But if we start to get some strength, call it, this is a 60-minute chart. This is short term. If we start to get some strength through 2350, maybe gold is going to go. And how do you confirm? I'm going to flip over to 10-year yields in a sec. 10-year yields moving lower, the stock market moving lower, moving higher, holding support. And if we start to break above here, do we know that this trade is going to work? No. Do we have a trade plan? And do we know where our anticipated zone of support is? Yes. Right here, based on typical wave 4 support zones within an ABC correction. This is support. This is how you think as a trader. This is how you say, I don't need to know what tomorrow's price action is and stress. I'm writing stress. Anticipated support zone of 2333 to 2299 with invalidation below 2290. We just wrote out a trade plan. Do I know it's going to work? No. Nobody, you can't foretell the future. But can you determine potential zones of support? Stop loss. Kick them up a little bit. Make them red and scary. $22.90, right about there. Okay, so this is a value zone in gold, but we know, as I said, on the macro front, you know what's up with stocks. But okay, so we have how much of risk? You have 2.3% of risk. Can you position size a gold GLD ETF, gold futures, gold stock, CFD, however you want to trade gold? Can you properly position size such that you take on 2.3, 2.5% of risk in the underlying position? And in the typical Elliott Wave model, (5E1), 100% is ideal. Blue is early. That's a shallow target. Okay. So what do we know? We have risk here. Our first objective is this clustering of wave 5 fib levels right here. First objective, 24.64 to 24.91. I'm going to make this nice and obvious. Red is your stop, first fib zone target, and then your second fib zone target. $26.02. I can't see off the screen. I'll come back to it. $26.02 to 20. I'll just put 2,700 right now. What's up there? 26.14. Okay. Kind of a no. 25.42. 25.42. 2542 to 2614. You guys asked me, how do you build a trade? That's how. That's how. Here comes my wife. She's going to bring me lunch. Oh, tunable. Thank you, babe. Appreciate it. So, there's a lot going on here, but, again, do I know it's going to work? No, but we have, as I said, 2.5% of risk to see if we can extract 5.5, 5.8% initially of profit and ultimately 9.8, 9.9, 10% of profit. Okay. This is how I think, this is when I used to trade for a hedge fund on Wall Street. We were an FX fund. And quick story. I mean, I used to trade all the time. I started out as a day trader, really actively in San Diego in like 2000, 2001. And then 2006, 7, and 8, I discovered Elliott Wave, and I was writing a research report for the retail brokerage firm, but trading on the hedge fund side. I was making a bunch of trades all the time, not really making any money. But when I discovered Elliott Wave and I got good at it, and I had to write the daily research report, I had to come up with a zone of anticipated support, initial targets, and I had to publish it on the platform and give clients all around the world time to read it and act upon it. After doing that for like a year or two, looking at my track record, all the BS in and out trades I was doing, weren't making any money. But then I realized the track record on the trades that I just went through the process that I showed you, those were making money. And I was doing it publicly at the same time, getting a big following on social. And I realized, like, get rid of the unplanned trades, focus on 1 or 2 well thought out executed trades, well thought out pre-planned trades that you literally define your anticipated support and your resistance zone, and put it on to position size properly, and let the trade go to completion on the reward side to justify the risk. And when I discovered Elliott, like, as the market was snaking up here, I was uncomfortable. I didn't have a framework in which I'd expect the trade or the market to be contained, and I wouldn't see my trade plans through to completion. But once you structure it, because I know you guys want it, I know you want the profits, I know you want the success, but if you give yourself, an area, a zone, an anticipated path that your trade is going to take, and it works, it's the best way to control your own emotions, and don't get in your own way. Let it work to your zone. And then, that's how you risk 2.5% to make 8, 9, 10, 11, 12%. If I told you there's 50-50 chance that this is going to work, and you can risk 2.5 to initially make 8 and then ultimately make 10, and it works half the time, you're going to be rich. right? I don't know if there's 50-50 chance that this is going to work. I don't know. There's too many factors out there in the market, but we've structured a quality risk reward trade. And we know, I didn't start on the higher time frames, but I know, what the time frame, what's happening in the bigger picture in gold. And, there's a lot of stuff up here. So what you got to do is you got to get the visibility off your daily. So when you're looking at the high time frames, you're not seeing all the stuff we worked on the short term. Takes a second. Okay. But we know that gold is breaking out. Visibility less than 1 day. So I know we wanted to talk stocks, but gold wound up being a really good setup. So we know the breakout is here. We know the breakout in gold is 2100. We're pulling back, trying to get here into the 2223, try to get up into this zone here. Now, what does that mean from the macro markets? Again, the biggest thing that would help us on the gold side is this guy right here to stop going up. I don't think it's going to work if this guy breaks above this key zone, this 4.71 on the 10-year yield. If this guy keeps going, the dollar, specifically against the yen, is going to get stronger, and your gold setup is going to have a hard time. Because gold is correlated with the stock market's going to have a hard time going up. Okay, so we went over that. All right, how about Tesla? I wrote an article for CNBC yesterday on Tesla ahead of earnings, and here's our bigger picture on Tesla. I know the news flow. I know they're cutting prices. I know EV demand is slumping. I know they talked about abandoning their $25,000 car project. I know the news story. I'm fully aware. I know what the expectations were. I know the deliveries are off. I know the challenges they've had. Got it. I know it. I follow all the fundamentals. But what's the technical pattern here? I see Tesla as wave 1, 2, 3. I see us in wave 4. Do you remember the Elliott Wave model I gave you over in the S&P? See it? You go up in 1, down in 2, up in 1. Let me make them the same degree. There we go. Here's the model. 1, 2, and here it is. 1, 2. Big breakout in 3. There's the model breakout 3. Typical wave 4s, triangle, complex, big old mess. That gives you market context. So if we're in C of a triangle, C, we might have D false break, E down, and then we go. Over on Tesla, I'm wondering if we are going into a triangle. And the news is bad. The news is bad. I mean, the earnings, they missed everything. They missed on revenues, they missed on EPS, they missed on margins, but Elon did calm the market. And I think as a trader, you have to know what the fundamentals are expected to be, what they're talking about. And then you filter that sausage here through the sausage maker and figure out where's the narrative that's driving Tesla. And, has the news community, social media community, the influencers, have the people with the loudest voices swung too far to the one side? And I wrote the article saying, you know what? I'm anticipating 135, 125 support following earnings. And this is a weekly. Let's go down to a daily. A triangle is 5 waves. Let me go to a weekly. Triangle is 5 waves. It's usually higher lows, lower highs. It's A, B, C, D, E. At that point, you have enough for the triangle to be done. So I was thinking that we're in the C wave. Now, each wave in a triangle is some form of a 3. It's a 3-wave move. This is a little wonky in here. This is clearly a 3, the B wave. This is a little wonky, but if you get further into the Elliott wave theory, you know that it's going to be A, flat B, down in C. And then we have expected support zones because in the Elliott wave world within a triangle, alternate waves are related by a 6-1-8 relationship, typically. So the 61% relationship, and I think we talked about this last week. I think I gave you this last week, I believe. 61% of distance traveled in A is at 125.68. That's the foundation of the analysis that would be the low in Tesla. Then you have the 786 retracement of B down in C at 128, off of the weekly down to the daily. Let's get inside of green C. I don't like the looks of that. That's got to be adjusted. It's got to be like that. There we go. Flat B. So it's A, B. And I'm frankly surprised we didn't get down to the 130, 125. We only got down to 138. We didn't get into the full support zone. I really wish we did. Okay. But I'll tell you, we have a possible breakout coming in Tesla. The news was fully cooked in. They're an AI robotics company. He recommitted to the $25,000 mark. He was in a good mood during the earnings call, which you never know what you're going to get with Elon. So as you start breaking above, you have market context to say, okay, I think we have D wave to go. There's going to be a lot of shorts. I don't know what the short interest in Tesla is right now. I should probably take a look. And you have implications in a 3-wave move following the Elliott model to get up to 263. So same thing, you have a plan. I'm still shocked we didn't get down into the sub 130. I'm a little uneasy about that. But we know where the line in the sand is. It's 24%. Now here's where the trading you has to think about this. Okay, we structured a gold trade where there's 2.5% of risk. By the function of volatility in Tesla, we have this on a daily chart, which is not much on vertical pixel distance on your computer. We don't have much to go, but we got to realize that's a 25% move to find out if we're going to go down and test the zone. It's pretty big. So position sizing, both stocks and stock options, you need to factor that in. You need to position size properly such that if you're trading this pattern on the daily, a 25% move lower is within your risk tolerance for whatever position you're trading. That's why Elliott is the ultimate traders, and especially swing and position traders. It's the ultimate trading tool for me. It works for me. So position size small enough that, okay, I'm okay if we have to go down and test this zone. We break below 125, I'm out. Let's go from the 195, go down to the quarter day. Let's see what's happening in Tesla here today. Robert, I'll come back to that. Gold and rates. Good one. We're looking interesting here, and I'll tell you what, I threw a little Tesla. I just bought a few calls here this morning. They were up $500-600. Now they're up 80. I just bought 3 of the this morning at 10:16. I bought some 157.5 calls. Just out next week. I just want to see if we can break above this little downtrend here. Okay. And again, very aware of that. So that's Tesla. Mark, I don't agree with that. Gold influenced more by inflation. Gold actually acts better in a deflationary environment, and it's a bigger conversation, but gold does better in a falling real yield world. And unfortunately, gold right now, I think we're seeing real interest rates go up. Yields are going up, and inflation expectations are stable to slightly lower. So that actually hurts gold. So longer conversation. Dan, so your long-term count for the SPY is different than Elliott Wave Internationals. Yeah. And again, I don't know if you were here last week. Were you here last week, Dan C? I think you were. I talked about my history with them, and I've got a ton of respect for him. I love him. He's a wonderful guy. I just differ on his analysis. I'll show you the long term. I don't mind. This is inside the members area. That trade analysis. Chart room right here. I'll show you the long term. I don't mind. Should I show the Dow? So here's long term, and where we differ is Elliott Wave International's long term wave 3 of 3. The big breakout is here, and it just doesn't work the way it is. So I think the wave 3 was up into 2000, and then there's the 2000 sell off, housing rally, housing crash via GFC. So I think we have wave 1 up to the 40s and 50s, 60s and 70s was a sideways stagflationary wave 2 that set up a monster heart of a third wave in the initial tech boom, A, B, C. And then what you do is you look at percent distance traveled in 1, 980%. Wave 3, green 3, 1,426%. So then you start getting Fibonacci multiples based on percent moves for the next move. Okay. So I think from GFC low, so let's go from cycle 4 off of the quarterly chart, cycle 4 to the monthly. There's cycle 4. This is the 2009 GFC low. Now, here's the facts. A correction, okay, this wave 2 right here, this is called primary degree. This correction, 2018, 19, 20 COVID, this correction was larger in percent gain or loss than anything we'd saw since the global financial crisis lows. That's the case in the S&P, the NASDAQ, and the Dow. That means this must be the highest degree correction since the 2009 lows. That makes it a wave 2. I believe we're in a wave 3. This is what we've been dealing with since 22, 23. We have a breakout occurring. We are certainly in consolidation right now, but I think we have minimum wave 3, 4, 5, which takes us significantly higher. And if you look at the blue kind of teal 3, 4, back on the long term, 3, 4, I believe squares up against the post 29, 1942 correction, which nobody knows this. Did you know from the Dow, the largest net distance decline correction was right here, including the 70s, including all of tech high to housing low, COVID. The largest decline we've seen in the Dow from an Elliott Wave correction point of view is 52%. This guy was net distance traveled to 23%. This guy net distance traveled to 44%. So what that means is once wave 5 unfolds and completes 3, the market owes a wave 4 correction that squares up against this. Wave 4, as I've showed you multiple times, usually sideways and meandering and wandering. I think the sideways lost decade that happened in the 60s and 70s happens out here, when most of us, it's a ways out. So we're only due a correction against this guy. At that point, 5 of 3 comes in, and then we're due a correction against the 29 crash. So yeah, I have a different interpretation. And again, I partnered with Brechter and Elliott Wave International for 2 years. We worked very closely, and we had a differing view on the outlook. And again, I like him. He's a wonderful guy. I just don't share the bearish sentiment. So far I've been right. Maybe I'll be wrong at some point, but I'll be right. So, all right, back to this. I'm bullish. Yep. AMR, great. Yeah, we can take a little Bitcoin as well. And what are we doing on time? I'm rolling. Sorry. I'm probably keeping everyone way past where we should be. All right. So we had IBIT. We had a Bitcoin position, just got stopped out on it, but I am not turning my back on it. Longer term, here's Bitcoin. And what I'm doing here is I'm hitting control up arrow on MotiveWave. It's wonderful because up arrow, I'm not deleting them. I'm just hiding different degrees just for clarity. You know, as I go to the smaller time frame, I want to see inside of here. Now, you know, MotiveWave is amazing because it has automated Elliott Wave logic in it. I just hit impulse, it gives me that. I go inside the daily. Let's get down to a 3-hour. Do I agree with the 5-wave assessment inside of Orange 3? I have some bad data back here. No, I don't, because this is going to be a largest wave 4 correction. I have some missing data back here, so it's a little unfortunate. But all good there. Down in A, up in B, down in C. I got stopped out. I was looking for continuation out of this zone, but you know, if the market, the stock market, which is somewhat correlated now to Bitcoin via interest rates, and you know, if we can stabilize a little bit, it'd be good. We're coming out of the halving in Bitcoin. We're down into the 618 retracement. You know, again, value area. Do I know if it's going to be the low? No, but we have, let's see. We have 786 is what I call the retracement of last resort. Anything below that, and I don't like to be in pullback trades. That's my line in the sand. I've seen a lot of stop runs through 618 that exhaust themselves into 786, but anything below 786, I really don't like to be a pullback trend trader. Template, what am I doing? Type, stop loss. Okay. So what percent do we have at risk into the zone? About 5.9%. 6% of risk of underlying. And if we're right, and we have a 5-wave move, you know, typical wave 3, minimum is 100% distance traveled in 1. So minimum is here. Ideal is the 1618 at 75. So I conservatively put it between 100%. We then get a wave 4 pullback, and then we get wave 5 to new highs. So yeah, you know, so you have this much of risk. And you have this much of potential reward. So that's Bitcoin. Anything else you guys want to take a look at? Anything else? Yeah, just, you know, for Elliott Wave, you know, the best thing to do is to get MotiveWave. All right, is to get MotiveWave and just start practicing. You know, there's a lot of free resources out there. I mean, obviously, watching Elliott applied every day is the way to go. And I point you to Trade Analysis, my research business, because we go through it every single day. But the best way to do it, I'm going to create a backup. I'm going to close this workspace down. Omer, am I running what times? I'm probably way over. Way over. That's okay. So I'm backing up everything. I've never lost a wave count, which is amazing. Copying analysis files. The best way to learn is to start with a blank workspace, and then watch someone that you know knows how to do it, and try to anticipate the changes in the wave counts that they make as the count evolves. Okay, try to do that. So what I'll do, I'm going to go in a blank space here. Okay, so now we have a blank workspace. All right. What I would do is come up with 3 time frames. Okay. And then new analysis, I'll just do MW webinar. And what we do is we can exchange workspaces, we can exchange analysis files. All right. So the best way to do it, this is an old one. Okay. Yes. And I can show you how to set this up. So you do chart. I want to go intraday. Let's go to like a 195. And then I want to go another one. Let's go higher up to a weekly. MotiveWave webinar. There we go, right there. This is an old one here. And when you get a trial, if you are with MotiveWave, coming to MotiveWave, you'll have a blank workspace. I'm just come up with a new one. Okay. So now what you have is you have 3 charts: weekly, daily, and then get down into an intraday. So the first thing you want to do is you want to start with 3 blank charts: high time frame, middle time frame, low time frame. And then you want to start applying Elliott Wave. And the easiest way to start doing it is you go over to the side here, over the Elliott Wave panel. And, I still think the stock market's in an uptrend. So you start applying the labels. And it's always good to start with somebody who has a bigger picture wave count so you can fill in the waves as we go. And it's possible that this is the situation. Okay. I don't think so. I don't think so, but let me just do something simple. This is the obvious count, but this is not a forecast. Okay. There's something else going on, but let me just show you. So the weekly, I just put the 5-wave move here. It immediately appears over on the daily. Then what you do is you're like, okay, let's see, because wave 5 and 3 and 1 should have 5 smaller waves. So then you right click, you go decompose, and let's go. I want to see the Elliott Wave logic 2 levels down. Oops, I hit the wrong thing. Sorry. Come on, you got to make sure they're connected so they can do the on the right swings, so they can do the analysis. Okay, and what you do is you just snap them in place. Make sure you're good. There we go. All right. So now what you do is like, okay, do I have 5 smaller waves inside of 5? Decompose, 2 levels. There we go. Now, a lot of stuff shows up in the chart. So you hit Control Up arrow. Hotkeys are the key to life in MotiveWave. And then you have 5 smaller waves here. Okay, great. Now, typically, a retracement will bring you lower. So then you pull over your correction over an Elliott Wave. Just start with a typical 3-wave correction. All right, down, up, down. Now, if it's a 3-wave zigzag, you're going to look at 5 smaller waves, and you can maximize this. And then as we looked at possibly in this market, there we go. Do we have 5 down? And then as we get off here, this is the daily chart I'm working. It's immediately being filled in over here on the intraday chart. So here's, you have a big picture view, and then you watch the market unfold every day, and you say, okay, here's my downside objective. General commentary over here, put some, draw notes on there. Okay. And then basically you hit save, and then okay, we have 3 time frames. I'm going to hide this. I don't need to see that on the weekly, even though it's going to still be here on the daily and intraday. So now what you do is you just watch it unfold while studying the guidelines and rules of Elliott, and start applying and moving between different time frames. So the analysis that's saved here on the NASDAQ, okay, if you go over to the S&P and you just need to sync the charts up. Macro watch. Go link to red. And then I haven't done this in so long, I'm forgetting how to make these guys red. Link red. Link red. Link red. So I'm going to finish this little setup example, but as you go through and click everything that is synced, you're now in the S&P weekly, S&P daily, S&P intraday. And as I go back to the NASDAQ, here's the analysis that I saved. Here's the rut. Here's focus stocks, Apple, so on and so forth. So you can keep a list with good quote sheet management, watch the wave counts evolve across over a period of a month, of 2 months, of 6 months, and get good at it and see how the market reacts to your anticipated wave counts. Apple, I'll tell you, I think is in a big flat. We might be carving out a low here soon in Apple. ABC down on the weekly. I'm going to quickly move over to the daily. I'm just going to do this quickly, which used to take me, 20, 30 minutes to do. I'm going to do in less than a minute. I'm going to use Elliott Wave, MotiveWave's automated logic, decompose 2 levels. I like this. ABC down. I just don't agree with that. You got to give it the algo a little help here. B wave was what they call a running flat, which is fine. And then I totally agree with the C wave as it ending diagonal. So 3, 3, 5. We have a possible ending diagonal in Apple. Ending diagonals happen in the C wave or wave 5. The fundamentals are very bearish. I love that because that's how lows are formed. I'm just using the hotkeys, which you'll get used to it. There's your support zone in Apple. I hit save. I shrink this back in so I have analysis on the weekly. I have it on the daily. And now I have it on the intraday. So now we're down looking for this 164 low on the 1 quarter day chart that was born from a weekly chart that's looking at the correction that began back in July 2023. So call it 9 months ago. That's how you set up MotiveWave. Use multiple degrees of trend, understand what's happening in the higher degree patterns, set your objectives, come up with a plan, define risk, define reward, ask yourself, does it make sense? Do I want to risk capital based on the analysis? And then you just hit save. And then when you come in the morning, you're going to see, oh, here's what the NASDAQ's doing. Got it. Here's what Apple's doing against my support level. Got it. Google, coming out, or Microsoft and drawing a blank. Who else is tonight? Microsoft and Google's coming out tonight, of course. Google is right at the highs, and look how much relative strength we're showing. And the stock gapped down with the broader market, and look how much it's closed. So, that's how you do it. And you hit file, backup, and then you come in, you never lose your analysis, and then you watch the markets. And, I just did work in 10 minutes right here, 15 minutes that would normally take me 3 hours to do with the old software. Okay. So what we want to do is, if you guys are interested but confused, I would say perfect. That's right where you want to be. Let's just give you a little summary here. Okay. Through my years as a prop trader, I learned that very few home runs ever came from nowhere and just appeared on my screen. The best trades and the trades that made the most money were thoroughly researched ahead of time through the lens of Elliott, as I just showed you. I think that the best work is done when prices aren't ticking, put some music on, and look for things that others don't really see happening, because those are where the best opportunities are. So close your mind, put on some good music, and do good analysis, and you're going to come up with turning points that other people can't see. So trading with a plan. We have expected starting and stopping points of trend and corrective markets that would set your expectations and produce a trading plan. Higher EQ, emotional intelligence, is what's important. When we step into the emotional uncertainty, the decision-making process gets pushed to the back of your brain, which is, from the prefrontal cortex down to the limbic. And that's where the emotions and the testosterone and the caveman tendencies to pump up and force your way onto a situation because you can't reason through. That's the caveman tendencies coming through back into our brain. So you're trying to push the decision-making process back up to the front of your brain where you're pre-planned and you're calm. So we're obviously went through Elliott Wave is applied to MotiveWave. Obviously I showed you the automated Elliott Wave logic. There's error messages if you don't do the right analysis. There's auto decompose. You can move quickly between linked charts, as I just showed you. Fib is automatically built in. The highlighted fib ratios for the ideal step within the wave sequence. Elliott is so damn confusing. I get it. How am I ever going to learn this? Well, again, I think using 3 tools: cloud share repository, watching someone that you do, that has MotiveWave, using the automated Elliott Wave logic in MotiveWave, and then we didn't even get to the Elliott Wave scanning software, which is cool. Cloud repository, we can talk about that at a later time. Automated Elliott Wave logic, we went through it. It's built into MotiveWave. Can Elliott be automated? Kind of, but it takes the human touch. Most importantly, with MotiveWave, you can shorten the learning curve of Elliott, which took me forever. I used to wait weekly for my favorite investment bank analyst to come out with his Elliott Wave analysis, and there was a bunch of them from UBS, from Morgan Stanley, from Goldman, from Deutsche. And I used to wait for those reports to come out, and I would have my Elliott Wave analysis done ahead of time. You can literally learn it in real time now with the technology. Scan for Elliott Wave setups, it's all there. So if you want to jump into a trial, I would go to this website right here, tradinganalysis.com/motive, take a trial for all these 4 reasons. I think if you do take a trial, we'll be in contact with you for opportunities for additional free training. Okay, so I would highly recommend it. If you're interested, jump in, and we'll be in touch for future training, and I'll continue the conversation with you. Okay. That's it. I'm going to leave it there, but I appreciate you guys hanging out and all your comments, questions, participation. It was really, really fun. Oh, thanks, Jay. Appreciate that. Amazing software, great presentation. I appreciate it. And, this is just what I do every single day. There was really no prep that went into this. This is my process that I'm sharing with you every day. Yeah, Microsoft and Google, we talked about that. No, NA, does Elliott work with penny stocks? No, you like to have big, thick, liquid stocks with a lot of opinions and emotions and participation and volume and liquidity. You want a lot of opinions set forth by people with a lot of money who are making, fluid price patterns and showing the conflict, as the stock goes through and discovers price levels and the mass market participation, you see their tracks. So you want more liquid stocks. What MAs? I just use 15,200 because I want to know what the institutions are looking at, and it's 15,200. Yeah, so inflation, energy go up. Yeah, so that's a big part too. And I'll end it here soon. Let's just see what the markets are doing. So again, tradinganalysis.com/motive should bring you to this page. Oops, that's not good. Oh, it's because I'm logged in. Hang on. It's because I'm the admin. tradinganalysis.com/motive. There we go. So that'll bring you on the free trial page. So just jump in there, grab a trial, 14-day free trial. And as I said, we'll be in contact for future. I think we're gonna do another free session, I believe. And so jump in there. As I said, this company's been very special to me, and I talked to Tony for a good hour on the phone yesterday, just catching up. And I've known Tony and MotiveWave for 12, 13 years now. So, so that's that. Yeah. So a couple questions, and I'll finish it here. A couple questions on those macro relationships. So, let's go XLE and rates. Let's go energy and rates. No Elliott for now. Energy is certainly breaking out. And, let's even go monthly. So there's a monthly chart of XLE energy ETF. We have a pretty significant long-term top here, or triple top. I don't know if it's a top, but it is resistance. And when it's not a perfect resistance level, I just like to put a sort of a zone indicator of resistance. I can't help but think I see the Elliott Wave pattern jumping out at me. 1, 2, and I just hotkeyed it 3, 4, 5. Triangle in XLE monthly decompose as a triangle. Pretty simple. Nice deep wave 2 right into the 786 retracement. And I told you I was going to do Elliott Wave, but that's okay. What I'm saying here is typically when you have wave 3 is long, the percent distance traveled in 1 is the foundation of projection for wave 5. So it's really as simple as percent distance traveled in 5 versus 1. And 100%, look at that. 100% is, holy Nikes. 100% projection in XLE is 1.618. Oh my Lord. I might retire on that one. That's awesome. 100% wave 5 projection is 161.8 in XLE. That's awesome. That also happens to be 69%, 68% above current. The 618, which is more conservative, is a 28% move. Did you guys know how much of the S&P 500 is energy, is XLE? Does anybody know? What percent? I was talking to a big money manager yesterday, and he thought it was 20%. What percent of the S&P 500 is comprised of energy stocks? Anybody know? 5. Isn't that crazy? And I think what we saw with Russia and Ukraine and so many countries struggling for energy, how important energy independence is to sovereign nations. And yet our energy sector is only 5% of the S&P 500. No, this might be a good trade. And we're about to rebalance the wealth management portfolios. And anyways, we have a good setup. We have a very good setup. So back to the point, I'm going to go control up arrow, and I'm just going to hide the wave analysis we did. I'm going to keep this higher than a weekly. So let's throw rates over this. So let's go XLE over 10-year yield. I don't know what we're going to find. I know what we're going to find with crude oil. Did I tell, have you guys, listen, we've been together now for 2 weeks. Have you guys ever heard me say how important interest rates are to the rotation in the stock market? I'm not going to do a mic drop. I'm going to do a mouse drop very delicately because I don't want to break my mice. This is a mouse drop. That's crazy. I actually didn't realize how correlated yields were with energy. I mean, I know with crude oil, and crude oil obviously is correlated to energy, but that's bonkers. 4.7% is so key in yields. And there's a whole nother discussion we can have. There's a whole nother side of what I do in terms of fundamental macro stuff, looking at real yields, inflation expectations, where nominal yields are, where real yields are, way out of the scope of this. But 4.7, I mean, this is how you combine macro analysis with Elliott Wave. That's the weekly. So what do we see? Okay, first thing I see is a divergence. All right, there's the moving averages. I'm just going to hide them. I just don't want to see them right now. So I see divergence. Energy is leading higher, but no buts. Energy is making a new high relative to the 23 high, where yields, as you know, are at the 786 retracement of 4.7 in the 10-year yield. So energy stocks are leading interest rates right now. And we know 4.7 is huge. So, you know, if we poke above 4.7 and the stock market doesn't get wrecked, including bringing down energy stocks, but if it continues to stay under pressure and go lower moderately, and energy continues to rotate in, you know, here's energy XLE as a ratio in the S&P. So, I should be able to thicken that up. But anyways, this is XLE SPX ratio. It's been declining from 22, rallied up here in 23, into a low here in 24. Since the turn of into 2024, we've had XLE outperforming S&P. And you can even do a little technical analysis on XLE SPX ratio. And breakout would be right there at about 0.019 XLE to SPX ratio. So, you know, what happens with rates? As long as it doesn't clock the market, but keeps growth stocks under pressure, which we're seeing a rotation into value, that looks like that'd be a nice setup. Okay. So that's energy. Let me do this real quick. And I gotta get going and do some real work. Copper gold. Copper gold ratio, which good Elliott Wave setup here. A triangle B, or A, B, diagonal C down into the 61% retracement of orange B, and then C versus A. This is how you fine tune and find the end of corrections. So copper gold, I'm looking at a couple copper mining stocks. And if the pace of copper gains continues to exceed the gains in gold, I think that's a bullish risk on message for the economy. And copper gold is starting to break out. I like where copper's going. You just look at copper by itself. Copper's up. It was up all day, 1.4% while everything else getting killed. We're a little extended in copper. That's a problem. I really would like to try to get some kind of pullback here, but it might be a while. So watching copper, watching gold, watching crude, watching silver gold. I'm even watching Bitcoin gold. Bitcoin gold is a good indicator. Look at this. Come on. Do you guys know we triple topped in the Bitcoin gold ratio? 1, 2, 3, pulling back in wave 4. Another reason why I'd like to see Bitcoin continue to go, because it looks like we're pulling back in wave 4 for maybe finally a break of the Bitcoin gold ratio going back all the way to 2021. And then crude, we know crude and yields are going to be trading together. I already have that done. Here's crude and yields. The macro relationships help you cut through some of the subjectivity of Elliott, which is not a shortcoming. That is a good thing. I don't want an objective rules-based system because I'm not Jim Simons with $50 billion to put into infrastructure and high power computing for that. There's very few organizations in the world who can do it. But we clearly know that there's going to be a correlation between yields and crude. A little bit of a divergence here. A little bit of divergence between crude and energy. So that's one of the key relationships we have to watch. All right. So who's not taking the trial, and why would you not get into MotiveWave? This software literally is, I couldn't do what I do, run money. I run a research business, tradinganalysis.com. That's a full-time job. So here's trading analysis. We have a team of 7 at Trading Analysis, my research business. Also run a wealth management business inside Edge Capital. And I could not do it without MotiveWave. So there it is. There it is. So I appreciate it, guys. I really thank you for your time. And Omar, so sorry for going over, but I'm having so much fun with these guys. And it looks like not many people logged off. So
No worries at all. It was super insightful. I appreciate you taking the time out of your day to do
you were sleeping.
it.
You didn't say no. No, I appreciate it. Stop share. It's all you. So thanks again, Omar and MotiveWave. I appreciate it, guys. All the best. Good luck out there, man. It is busy. So, Omar, I'll catch up with you.
Sounds good. Take it easy.